Petya, welcome to the program. Thanks so much for joining me from these fall meetings all the way in Marrakesh.
Thank you so much. It's a pleasure to be with you.
Your global outlook for global growth holding steady at 3% for this year, but downgraded by 0.1% for next year to 2.9%. We've really seen economies across the globe remain resilient in the face of aggressive central bank rate hiking campaigns. But we're starting to see some softening now as we head into the fourth quarter. What are the downside risks to your global growth outlook?
Yes, we have seen a lot of resilience, but growth is still quite slow and uneven. And the risks to this outlook are still very much on the downside. So when we think about the main risks that we see at this point, I would mention the scope for further slowdown in China as one risk. Another one is just the commodity price volatility related to geopolitical developments or climate shocks. And then, of course, there's the risk that inflation does turn out to be stickier than what we are currently expecting, which would require further action on the part of central banks.
How do you see the Israel-Hamas war impacting global inflation? We've already seen oil prices spike. Global headline inflation has peaked, but do you worry that this conflict could reignite that, seeping into core inflation and prolonging the central bank's fight against global inflation?
Well, first off, I think we're deeply saddened by the loss of life, and we do hope that there is a speedy de-escalation and end of violence. I think it's too early for us to come to a view on the economic impact of what's been happening. We are certainly watching developments very closely. Yes, we have seen some increase in oil prices, and in the past, when in the event of geopolitical conflict, we have seen a lot of volatility in markets. Now, again, we're not we cannot say that right now, but it's certainly a risk that we are going to be watching. And just in terms of the rule of thumb, how we think about the impact of oil prices on inflation, a 10% increase in oil prices that is sustained is expected, then that would translate into inflation, high inflation at the global level of 0.4. So again, this is not about predicting the impact of the current situation, but just in general, if one were to see a sustained increase in oil prices, these are the sort of magnitudes that we can think of.
You mentioned China. You've lowered your outlook for China and the world's second largest economy dealing with a major property crisis. In fact, this morning we're learning that Evergrande, one of the property lenders, is reportedly on the verge of collapse. It's restructuring, I should say. Country Garden, another property lender, now saying it won't be able to pay some U.S. dollar-denominated debts. What is the risk that this property sector crisis develops into a full-blown financial crisis? And what is the prospect of contagion?
Well, we have downgraded our forecast for China, and part of that has been due to the impact of the ongoing real estate crisis. And the question is, again, to what extent that would have broader implications. We do think that the authorities have the necessary tools to handle the ongoing situation. They've taken a lot of measures so far in the real estate market. They've been mostly on the demand side, and our recommendation has been to take action on the supply side to restructure, to really solve the problem in the real estate market. Now, the implications at this stage are what we have in our baseline, but of course we are hoping that once the risks are addressed, we're not going to end up in a situation with contagion within China and beyond.
Well, let's hope so. Switching gears, the global average temperature in July worldwide was a record. How do you see climate change, global warming impacting global growth as well as inflation?
Well, climate change has become a macroeconomic issue. It's really staggering when we look at developments across countries, in how many cases we've downgraded our forecast because of floods or droughts or, again, weather-related events. So this is certainly one of the risks that we point to. It is a particular risk when it comes to food prices and food security. And at this stage of the inflation cycle, it's certainly not going to be helpful to have another round of increases in these prices. So again, it's hard to predict, but it's certainly a risk that we are watching very closely.
Petya, in the U.S., you have upgraded your outlook. What is the potential for stronger U.S. growth and a stronger job market that continues that could keep inflation elevated here for longer, requiring more action from the Federal Reserve?
Well, that certainly has been the story over the past year. We've seen a lot of resilience in the US economy, and we've been surprised on the upside in terms of developments in consumption and labor market over and over again. So I think it's fair to say that it also remains a risk going forward. And that is certainly one of the reasons why we think that policymaking and interest rate policy should remain very data dependent, and depending on how things turn out, then being able to respond to that, because the inflation fight is still not over.
Yeah, is the IMF of the view that the US should hold rates steady at these levels, or another rate hike would be required to bring inflation further down?
I think our view is that the current path is appropriate. I think it's important also to keep in mind that when rates stay constant in nominal and inflation comes down, what that translates is into real rates increasing, and so I think we are very much in that situation now. Of course, depending on what type of data come out and what type of outturns we have, then that may or may not require an adjustment, of course.
Petya, thank you so much for your insight. We'll have to leave the conversation there. Stay safe in Marrakesh. We'll see you soon.
Thank you so much.